What's up, traders? I am Vincent Mokoteli from Vinboss Signal Factory. This is not a financial advice. It's powerful education for those ready to level up. With the right mindset and real strategy, success is within your reach. Welcome to Vinboss Signal Factory, where signals meet success. So traders, as you already know, whenever there's a big event in the market happening, what we usually do is we start off with the fundamentals to try and explain or what to expect in the market, and then we go forward with the currency analysis and the forecast. So with that being said, we do have the PPI with us today, and it is expected to be lower than 0.9, which is the forecast is 0.3. Of course, let's see what happens, like if the producer price index, the PPI is the producer price index forecast. Now, to explain, firstly, the PPI measures inflation at the wholesale level. It's a leading indicator of CPI and inflation pressure. The Fed is sensitive to inflation data, so markets react very strongly to this. Now, the forecast shows a big slowdown from 0.9 to 0.3, as you can see right now, which is what I've just highlighted. That measures the market price. That means that the market price is easing in inflation pressures. Now, let's make an example. If the market or the price data comes out as 0.3 or even lower than 0.3, it confers cooling inflation. The dollar will likely weaken as Fed rate hike pressures eases. Number two, what it means, stocks and gold likely to rise on risk-on sentiment. Yields could slip lower. And then there comes a second scenario, which is also possible. The first scenarios that I've just mentioned was if only the PPI reaches the 0.3 and below the 0.3 forecast, and then the actual numbers just go to 0.3 and then below 0.3. But if there is 0.3% increase from the PPI, then what? But not higher than this, because it is possible that you might find it coming to 0.4%, 0.5%, but not as low as expected. Now, what does that mean? It means that the inflation is low, but not as soft as the market expected, right? Because of whatever it is that you guys are seeing here, 0.3% to 0.9%. That means it will not be as low as 0.3, rather it becomes 0.5, but it is still lower than 0.9. This is what I'm talking about. Does it make sense to anyone else? This is what I'm talking about. So it is not as weak as expected, but it's still mixed or neutral. So what we will have, if or how would the dollar react to this? The dollar would react to this as mixed, of course, or rather neutral bullishness, which may cause short-term lift because of inflation hasn't cooled as much as forecasted. Gold could dip briefly, and stocks may hesitate since Fed policy still has inflation risk. But since it's still below last month hot 0.9%, which is this one, the long-term bias could remain slightly dovish for the US dollar, which rather for other people dovish means bearish. So if the PPI is bigger than 0.9%, back to hot inflation, strong USD rally, gold and stocks will sell off, of course, if it prints better than expected, 0.3%, and then yields would rise. This is what I'm thinking on PP. I'm not really gonna jump much into crude oil inventory and the 10-year auction, but for me, they do not necessarily move the market. So for us, we would have to go back straight to the charts to understand what I've just said right now, mixed with the price action of the chart. So first off, we will start off with the US dollar, the euro, and the US. So traders, with the euro and the dollar, what do I expect? Already you are seeing something that looks like a break of structure above here to the upside. If this continues, the 30 minutes chart candle close above or with a positive momentum to the upside, it might be a great place to look for continuation to the upside to make that 1:3 risk to reward ratio. Or rather, if it happens before, in the London session, we do have a continued correction to test our first demand zone, or rather our second demand zone. This would also be a great place to look for buying opportunities to continue to the upside to make that 1:3 risk to reward ratio, or to reach the new high, which is our target profit from the second demand zone of 1.1759. This would be a fantastic place to look for taking profit, of course, or making this new high here at 1.1780. This would also be a fantastic setup. So this is the euro, and this is what I do expect. Remember, yesterday we did have a scenario where we did buy from these levels, and after buying from these levels, we did mention right on yesterday's video that break even was most important on this, because rather the euro is stronger particularly than the dollar itself. So in pairs like this is where we move break even, and we take no loss at all if it does come down, because it will be a strong sell to the downside, which is exactly what happened. This is what we expect to see. If we do reach these levels, then continuation to the upside does happen. But as you can see, we have something like this, which is a break to the upside, a retest, and then a continuation, which leaves us with something like an inverse head and shoulder. Of course, if it does continue to the upside, you have to check on these patterns like that. So without wasting much time, we go straight to the euro, to the pound, and the dollar. And traders, with the pound and the dollar, what we did have from Monday, of course, was this. And we did have a nice, fantastic buy here. Did not reach our take profit. Of course, we got break even from these levels, and then a continuation. What I do expect, if we are going to have a continued pullback, the demand zone is still a fantastic place to look for buying opportunities. At 1.3559, this would be a great place to look for buying opportunities and continue to the upside to make that 1:3 or to make the new high. But since, if you pay close attention, or if you zoom in a little bit here, you will realize that we have waves like this: 1, 2, 3, 4, 5, and a break of structure, of course. And then after this break of structure, what did we have? The continuation to the upside. And as you can see, this right here, it looks like it is about to close higher, and after the 30 minutes time frame, which closes 6 minutes from now, this would also be a great signal to continue to the upside. But you need confirmation before you jump in. So this is what I do expect, especially if the markets do not correct again to the downside before the PPI. And when the PPI prints comes out, I do want to see the PPI print anything as low as 0.3% or below 0.2%. It will give us a great, a fantastic place to go and buy anything against the dollar to the upside and sell the dollar to the downside. So this is the pound and the dollar for us traders today. And without wasting much of our time, it's very similar to what we did have for the euro, and this is what I am biased on. I'm not looking for any selling opportunities, of course. And if anybody is looking for selling opportunities, I have no clue why they would be looking for selling opportunities at a structure like this. But if you were going to look for selling opportunities, this of course would be the only place that I would be looking for selling opportunities. But it is highly unlikely at this point. What I would see, if we do get a correction, it will only end as far as this 1.3482 or our first demand zone and second demand zone. The first demand zone being 1.3459 and the second demand zone being 1.3415. Without wasting further time, let's go straight to the euro and the Canadian dollar. So traders, this is the euro and the Canadian dollar. Without wasting much time, you remember that Monday we did have a buy fantastic around here, and then we did break even. Why did we break even here? Both the Canadian dollar is weak and the euro is strong, so we do have to break even. We do not break even when more or less they are relatively close to each other's strength. Maybe this one is stronger, but the other one is strong, but not strong as, you know. For an example, if the euro is strong and the Canadian dollar is strong too, this would not benefit any of us moving our trades to, or moving our stop loss to entry to break even. It will only not give the trade enough space to breathe and retest the levels properly. So with that being said, after this break even that we got, I still do expect this to retest our demand zone for the second time at 1.6179 to look for bullish patterns and formations or bullish opportunities to continue to the upside. And with that being said, remember I did mention this as the inverse double bottom, the bigger inverse double bottom, because yesterday the double bottom that we were expecting, we did have a reaction, of course, at the levels that I did mention. Then after the reaction, came down to make sure that the consolidation keeps coming. So with that being said, this is the euro and the Canadian dollar, and the euro and the Canadian dollar changes nothing. With that being said, we are still looking for the PPI movement to take us to the upside. Rather, if we do not have that movement, we would rather break this weekly break of structure and then a consolidation to retest it, and then a continuation to the downside would give us that 1:3 risk to reward ratio setup. So with that being said, traders, this is the euro and the Canadian dollar. Let's go straight to the pound and the Canadian dollar. So traders, yesterday we did take profit on the euro and on the pound, rather than the euro on the pound and the Canadian dollar. After the buy on Monday, we did come, and I did expect a push to the upside, and that push was fantastic. We did take our take profit, and then afterwards we started consolidating. But yes, you can see that the consolidation, the power between the euro and the GBP are different. The euro is weaker than the GBP, and the GBP is stronger. That is why we did not even test the first demand zone on Monday, but on the euro we did test the first demand zone. That's why we did take profit on the pound with the buy, and on the euro we had a break even, of course. You see, that means the pair itself, euro and GBP, it is currently going down without even checking many facts. So without wasting further time, I'm not going to discuss this from today onwards. The pound and the Canadian dollar is out of our watch list because we're already taking profit. We don't want to get into this again. So without wasting much of our time, traders, this is the pound and the Canadian dollar. We should move over to the euro and the pound. And traders, you can see right now with the euro and the pound, I did mention while coming to this pair, with the euro and the dollar, there are deeper pullbacks. The euro and the Canadian dollar, there are deeper pullbacks. The euro and the pound and the dollar, there are shallow pullbacks. And the pound and the Canadian dollar, there are shallow pullbacks also. What does that mean? This means the pound is stronger than the euro, and it is evident in this price action. Now, if we do not get any reaction from these levels right here, and we do break our weekly break of structure, of course, this is the only time I will be looking for selling opportunities to the downside. And with that being said, this would be a fantastic place to look for selling opportunities. If we do break below and retest the weekly break of structure, I was looking for buying opportunities up around here, got invalidated, of course, and I did try to get in here invalidated the second time. I'm no longer interested in trying to look for any of the buying opportunities unless we do break above here and then a continuation to the upside, which might happen as soon as the PPI prints out a weaker than expected reading. But if it does not, I don't think the stance will change between these two currencies, which is the euro and the pound. And the pound will dominantly be bullying the euro for the rest of the trading session. So maybe next week, if we go down below, we will see a pullback. So this is what another thing that I want you guys to pay attention to: the mindset, the psychology behind trading, how you react to certain situations versus how you react to winners. You don't have to celebrate winners and try to win more. No, after you win, that's it, you move it to the back. After you've got invalidated or lost at some situations, you don't even get sad. You just know, you follow the rules and the structure. So without wasting much time, this is the euro and the pound. I'm trying to keep this video as short as possible today because yesterday we did a long video, and I'm trying to make short videos. Sometimes giving you informations or talking over the videos help you guys to see what the true market structure is. So without wasting time, let's go to the pound, to the US dollar and the Canadian dollar to see what happened yesterday. And yes, traders, with the US dollar and the Canadian dollar, what we did have is a fantastic setup. I remember yesterday I told you that this would be a great place to look for buying opportunities, and after we entered, the market did the same. And then we did not, listen, on this currency pair, we did not stop to break even. Why? Because both the dollar and the Canadian dollar, we are bearish on them. So even from the beginning of the week, I was trying to tell you that this pair, you need to be careful. You need to halve down what you usually risk on a currency pair. So right here you can see it is 1:, the trade was 1:5.94, almost 1:6. This is what we got from trading this to the upside with the real traders community. And even on YouTube, I did mention this. I did give a signal yesterday that you can buy this to the upside. So this was a fantastic place to go to the upside, of course, and take out structure here at 1.3862. This was a fantastic setup also. So without wasting much time, this I will not be discussing going into the next day on the YouTube free watch list. I would not be discussing the pound and the Canadian dollar and the US dollar and the Canadian dollar. They will not be discussed on the watch list. We are now moving towards, we will only be moving towards currency pairs that are still not on the profit target yet, and see how we can make them. So far, we do have invalidations only on the euro and the pound, and the rest have been break even, of course, and nothing interesting this week. But I think starting from today with the New York session and the PPI news, everything is going to be fantastically open for us to make our last profit. So without wasting much time, traders, this is a fantastic week for us. Thanks for watching the video and happy trading.